Hey everyone, welcome to my channel and welcome back to my subscribers. This is where we talk about turning your cash into wealth building assets. This is Bald Guy Money. I am Bald Guy. Let's talk money. In today's video, we're not exactly going to be talking about turning your cash into wealth building assets, but rather how we can teach our kids and the kids we're kind of responsible for educating about personal finance, because it's a very important topic that simply doesn't get covered enough. I have two kids, they're aged 12 and 9, and I wanted to put this video together for everybody watching out there who has contact with kids and has the ability to pass this knowledge on to them, because I think it is really important. And I'm going to show you in a moment some things, some exercises, some games I do with my kids. So please watch to the very end if you are wanting to pump up your kids and the kids around you. If you're a teacher, for example, if you want to pump up their financial IQ. None of this is financial advice. We know that. Let's get started. Okay, so I've been exposed to all kinds of ideas on how to educate children on personal finance. And I found that the biggest mistake most people make is that they focus simply on having fun. How can we make this just fun instead of actually giving a little bit of thought into whether or not the activity is actually beneficial? So I've given some thought into what I think is important for kids to actually focus on in a fun way, of course. And here's the list of things I think that are worth focusing on. Number 1, mental math, the ability to do quick calculations. Number 2, understanding inflation. Number 3, understanding cash flow and passive income. Number 4, understanding the difference between assets and liabilities, and how to calculate return on investment on those assets and liabilities, as well as understanding the opportunity cost associated with them. So basically what we're talking about is if you buy one thing, you are giving up your ability to buy another thing. We're going to cover all this in detail in a moment. So let's cover these points in order, starting with mental math, or for our British viewers, mental maths. This is so important to have the ability to do quick mental calculations. You know, whether it's adjusting your monthly budget for an unexpected cost, whether it's calculating what taxes you may have to pay on capital gains, so the sales of stocks in a profit, or whether it's simply finding errors in a bill you receive, it is absolutely crucial to be able to do mental math, and I sadly meet too many adults who are unable to do it. So I have 3 things I focus on with my kids in order to ensure that they are able to quickly make calculations in their mind. And here they are. Number 1, flashcards. You can find these on Amazon. They're quite cheap. And I've purchased for my kids multiple sets of addition, subtraction, division, and multiplication at varying levels of difficulty. Number 2, a game called Math Prodigy. It is a role-playing game, kind of like for those of you who've played Legend of Zelda, Final Fantasy, although the point of the game is actually to go through it solving mathematical riddles instead of solving puzzles as you would, for example, in Zelda. And number 3 is a game called Times Table Rockstars. It's a timed game where you can compete against friends and family members solving mathematical equations in addition, subtraction, division, and multiplication. Again, the last 2 things here, so Math Prodigy, RPG, and the Times Table Rockstars, these are things that are available on the internet for free. All you have to do is Google them and create an account, and your children can access them and play them. Now, to get a bit deeper in understanding money, it's very crucial that kids understand the concept of inflation, and I have a very simple way I cover that with my children, and it's actually a pretty fun way. So I'm sure many of you out there have a Monopoly board at home. Get it out with your kids and we play Monopoly with inflation. Now, there are many different variations on how we can play this game with inflation, but the simplest way that I've found doing it and how I play it is that every time somebody passes go 3 times, and you'll have to kind of keep track of it on a piece of paper, what we do is we double the amount of money somebody receives from passing go. So for example, for the first time it would go from $200 up to $400. But that's not all. At the same time as the amount for passing go doubles, so does the cost of everything on the board, including the cost of purchasing properties, the cost of rent, and the amount of money you get from mortgaging properties. And the whole idea of this is to make children understand the fact that the dollars they have today will not be will not be worth as much as they are today in the future. And it's important to convert that cash in line with the mantra, the code of Bald Guy: convert your cash into assets in order to hedge yourself against inflation. And in the case of Monopoly, and we'll cover this on the next topic, generate some passive income. And I think this is a very fun and interesting way of tackling the topic of inflation. And again, it brings everybody together, and I mean, I know my kids love to play Monopoly, so I really highly recommend this one. The next topic that I think is absolutely crucial to cover is a topic that was really introduced to me by Robert Kiyosaki, the author of Rich Dad, Poor Dad. I'm sure many of you have read the book, and it is the concept of generating passive income or cash flow. Now, thankfully, Mr. Kiyosaki has made this absolutely easy peasy for us to hand off and teach our kids about with his game called Cashflow. What's best about Cashflow is that you can play it for free online by going to this link right here. I will also link it up in the description so you can just click on it easily. And it is an absolutely fantastic game that you can play with your family around a table. It's multiplayer capable. You can create a private room on a password and have your family members meet there and play the game. And why is it such a good game? Well, the reason I like it so much is it differs a lot from Monopoly in that the point of the game is not to bankrupt your opponent, but simply make investments to generate enough passive income to cover your living expenses and escape what Mr. Kiyosaki likes to refer to as the rat race. I really like the positive vibe of this game because not only does it teach kids to invest in property, generate passive income, and really teaches them how to understand an income statement and kind of the basics of a balance sheet, but it also teaches them that really not everything in life is adversarial. Multiple people can succeed at the same time, and I think that's something that, again, is not instilled enough in kids today because, again, like I said, with Monopoly, it's very adversarial. You're trying to bankrupt your opponent. But in reality, we know that, you know, if we help and support the people around us, again, in line kind of with the Bald Guy philosophy, that, you know, multiple people can succeed together. So that brings us to the final topic, which is teaching our children the difference between assets and liabilities. And I left this one for last because it's really the most crucial, but the most complex. Now, I also lumped in return on investment calculations and opportunity cost in here, and I'll explain why more in a moment, but let's start with covering the foundation of what is an asset and what is a liability. The activity I do with my kids is simple. I call it assets and liabilities. It's quite a simple name. And what I do is I just name off different things and they verbally categorize them as either being an asset or a liability. Now, other variations of this are they can, you know, write it down on paper and compete against each other in like a test format. Or what I do is I just sometimes print off a long list of different things and give it to them. I say, okay, mark here which ones are the assets and which ones are the liabilities, you know, just as a kind of a test. And they like doing that because they like to prove that they understand this kind of adult topic. So before I go any further, I just want to clarify how I define assets and liabilities, as there are many different takes on this. There are people who work in corporations who understand it very much in the accounting way, but I don't think that that particular methodology applies to personal finance. And here's why. An asset is something for the person, for the individual, that generates money for them or appreciates in value. Whereas a liability is something that costs money or depreciates in value. It's really that simple. And here is actually a really short list I've put together, one that I practice with my kids regularly so they understand the concept and difference between what is an asset and what is a liability. Here it is. In the assets column, we are talking about things like gold and silver coins, Bitcoin, stocks and bonds, rental properties, art, and collectibles. Numbers 5 and 6 might be a little bit new to you, but the fact of the matter is that many wealthy people are putting their money into art and collectibles. Even when you're talking about collectibles, whether they're baseball cards, comic books, watches, rare ancient coins, or something like that, this is really a thriving business and absolutely counts in the asset column. When it comes to liabilities, we're talking about cars, we're talking about the house you live in, bills you have to pay, vacations you go on, number 5, consumer electronics, and number 6, entertainment. And why are all those things liabilities? Because they take money out of your pocket. And I know some of you are probably looking at the computer screen right now and yelling, but my house, I own my house, I've paid it off, it is an asset, it is not a liability. The only thing is, please remember this, the house you live in is a liability because you pay for insurance, you pay for repairs, you pay property taxes most likely. All of those things are actively taking money out of your pocket and they are not putting money in your pocket. Now, the value of your house might be increasing. However, until you sell it and realize any profits, it is still a liability. And remember, even if you sell your house and make a profit, you still have to buy another property and live somewhere. And that's a very important concept that I always explain to my children so they understand the difference between an asset and a liability. So if you want to take this a step further, you can introduce your children also to the concepts of return on investment and opportunity cost. And luckily for us, it's never been easier to introduce those concepts to kids thanks to digital applications. So I recognize that most kids these days have telephones, they have iPads. I know my kids do, but it doesn't mean that your kids do, or maybe you don't want them to, and that's okay. You can do all of this from your own personal device and just update them daily or weekly or whenever suits you. And the specific app that I'm referring to is eToro, which is a big mobile investment application. I'm sure some of you have heard about it. And I'm not sponsored by them. I don't receive anything from them, but for the sake of transparency, I do buy and sell stocks on eToro personally. So, what's really cool about this app is that you can actually trade virtually, which means you can trade money without actually having to put up any real money. And of course, the first step is you have to download the app, but it's as easy as this. Here, take a look. Number 1, when you open the app, you click on those 3 lines in the top left corner, and it will open up all of your different possibilities of what you can do. And you'll see a little green box and it says real. What you do is you just touch on that box and you can change it in step 3 from real portfolio at the bottom to virtual portfolio. Once you've clicked on virtual portfolio, the screen on the far right in step 4 will open up and you'll see that you have 100,000 virtual dollars for investing. And once you've invested your virtual money, now the application will calculate both return on investment and P&L, or profit and loss, automatically. And this is really where the lesson for the kids start, for these very 4 important reasons. Here they are. Number 1, focus on the percentage of return, not only the profit and loss. It might be nice to invest $1,000 and make $10 in profit. Profit is always good, but it is important that children understand that a 1% return is not as good as, for example, a 10% return, and identifying those opportunities where you're going to get the highest percentage of return is really the most important thing in investing. Number 2, opportunity cost. By investing in one thing, you are actually giving up your ability or opportunity to invest in another thing. If I invest all of my money in gold, I am giving up my ability to invest some of that money in Bitcoin, which might yield a higher percentage return over time. Number 3, diversification is good, but too much diversification is not a good thing. Remember, Alexander the Great once said, when you attack everywhere, you attack nowhere. And this is a very good lesson for children to learn, that investing in, for example, individual companies in different sectors is a great way of diversifying. But once you hold more than 10, 15, or maybe even 20 different things that you're invested in, it becomes very difficult to track. And it becomes very difficult to really maximize your profits, as it's impossible really to make good swing trades and decisions on where you need to take resources out of and allocate more resources to. Number 4 is the importance of being flexible and securing profits. And this is kind of what I was alluding to in point 3, in the sense that something that I always teach my kids is, if you're invested in a stock and it's run up, for example, 50, 60%, I'll give you an example recently, Tesla has run up really high. It is always a good thing to take a little bit of profit from those things that run up quickly and invest them in something else you believe in, but has not run up or maybe has declined a little bit, as what I like to call a swing trade. And that's a very good lesson, and kids are very responsive to that. I know it might sound complicated to some people out there. Some people might not give their kids enough credit for being able to understand this concept, but believe me, my kids are 12 and 9. They're totally average kids, and they very much understand these concepts. Okay, now that we've covered those 4 topics, let's quickly summarize what it is we want the kids to really learn and understand. Number 1, really emphasize mental math skills. As I said before, this is the basic, this is the foundation, the ultimate foundation of being able to manage your personal finances and being successful in doing so. Number 2, explain the importance of owning assets to protect against inflation. If you remember the Monopoly example I gave you, kids will understand the concept of using the money they have now to invest in assets which will appreciate in value over time as the value of the money they're holding decreases. Number 3, explain the concept of cash flow and passive income. And this is one we covered in the game Cashflow, which is available online for free, invented by Robert Kiyosaki. And this will help children understand the idea and concept of investing money in real estate, investing money in things that generate money and put that in their pocket, in the pursuit of being able to generate enough money where you can actually cover all of your costs and be your own boss, or what I like to say, financially free. The 4th one is, investing comes with a certain level of risk. In the example that we're going to do with our kids with the eToro app, they'll see once they invest $100,000, sometimes it goes up, sometimes it goes down. That is a very important lesson in understanding, because absolutely no investment comes without risk. No matter how safe it is, whether it's real estate, gold, Bitcoin, whatever you think is the safest investment you're in right now, be aware that it comes with some level of risk. Number 5, get them thinking in terms of percentages. It is very important that kids think about things in terms of percentage and not just in absolute value. By understanding that, they will be able later on to understand important concepts of compound interest, and also being able to identify what the best opportunities for investing, specifically in places like the equities markets, might be. And the final point is that for every investment they make, they give up the opportunity of making another investment, and that's called opportunity cost. And especially in that eToro example that I gave, if they're invested in multiple equities, a great lesson to kind of cover with them is, you invested in stock A, which is up 5%, and you've invested in stock B, which is up 20%. If you had invested more into stock B, you would have had a higher profit, because of the 20% would have generated you more money. And again, this is a very important concept that children should understand. And building on that, and it's not on the list actually, but it just came to my mind, the concept of, especially if you want to teach your kids a little bit about trading stocks and equities, doing swing trades. If something goes up really quickly, how to take profit out of that and put it into things that you believe in, but might not be as high as you think they should be. Before I finish, I just want to say, you know, when I was a kid, I really didn't talk much about money with anybody. In fact, it was discouraged. And I never really understood why, because I always had this dream that I wanted to be rich. I wanted to be financially independent. And nobody really was there to support me or let me know, you know, this is the way that you can achieve those things. And it wasn't really until I found that book, Rich Dad, Poor Dad by Robert Kiyosaki, that I was really able to truly understand what I need to do in my life to achieve the goals that I had. We live in a world today where many adults in developed countries cannot afford a $2,000 emergency. Me personally, I can't imagine that, but it shows how important educating our children today on the topic of personal finance really is. And that's all I have for this topic. So as always, I wish you all happiness. I wish you all success. I do hope to see you in the next video. And with that, I say goodbye.